It's a pleasure to have Jordan Trimble, CEO of Skyharbour Resources, here alongside Serdar Donmez, head geologist of Skyharbour. At Ocean Wall, we've been fortunate enough to work with the Skyharbour team for a couple of years now. Such was our conviction in this story and obviously the underlying uranium thesis, but particularly with Skyharbour's focus on what is a diversified way to play the Athabasca Basin uranium story. What I'll do is a quick 5 minute intro or less, just on an update on the market, and then hand over to Jordan and Serdar to go through the Skyharbour story, and we'll make sure we leave some time for Q&A at the end. I think most people on this call are either have been or are looking to obviously invest in this space, but uranium is really undergoing a paradigm shift, not just in terms of the underlying commodity price, but actually in terms of it actually being used in the form of nuclear power. Uranium prices today sit at about $86 a pound. Highly volatile moments in the uranium sector, having reached 100 just last week, but still 86 being one of the highest levels for uranium prices in the last 5 years. Bear in mind, we were at around $20 a pound 6 years ago. Uranium prices have had a great run, and therefore the setup for companies that can exploit that move are set up very, very well. And ultimately, what we believe is that you have, when we think about the ways that you can get exposure to this space, you have obviously your producers, which have varying levels of gearing or leverage to rising prices. You have your developers, again, some of which forward sell their production as they go through the development of their mines. And then you have your sort of exploration companies, and I would probably put Skyharbour in sort of the midpoint between exploration and development stage, and Jordan and the team can talk about that. Ultimately, we are firm believers that uranium prices are going to go significantly higher. At $86 a pound today, there is incentive pricing for most new uranium mines, but uranium really doesn't behave like any other commodity on Earth. There isn't a commodity that I think you can find globally where you have seen the underlying price go up 400% and you have seen basically no supply side response. Call it a 25% increase in supply over the last 5 years. Why is that? That's because not only is mining hard, but uranium mining falls under a completely different level of regulatory scrutiny versus anything else, any other mine or metal in the world. We actually haven't permitted, licensed, and gone into production for a new uranium mine in a decade since the Husab mine came online in Namibia. And that is particularly relevant in the part of the world where Skyharbour operate, which is the Athabasca Basin, where there hasn't really been a new mine come online since Cameco brought online Cigar Lake. We think the setup is now going to be driven fundamentally by increase in nuclear power demand or nuclear power capacity. And there's been a lot of talk about bringing online new capacity, and we talk about 2026 being the year that nuclear moves beyond rhetoric, beyond headlines, and actually we start to get projects to final investment decisions and start to actually generate what are abundant, firm, clean electrons. Three reasons why we think we're at an inflection point for nuclear beyond the traditional arguments that you'll normally hear. Funding, governments actually stepping in the Western world, like we've seen China do. China are building more nuclear reactors in the next decade than have been built globally in the last 3.5 decades. And actually also the private sector stepping in, banks and also corporates, mainly in the names of sort of hyperscalers, willing to step in and fund these projects. The second aspect is regulatory change, i.e., can we actually implement a regulatory framework that facilitates new nuclear and doesn't prohibit it? And nowhere is that being more personified than in the US with the reformation of the NRC, being told stop putting barriers in front of new nuclear and let's strip out the things that we don't need when it comes to licensing and permitting. And the third thing is the globalization of the workforce. For us, the globalization of the workforce is about letting people who know how to build nuclear build it. If you told me the US was going to build their own nuclear, or particularly if you told me the Brits were going to build our own nuclear, I probably wouldn't be sat here today feeling as bullish as I am about nuclear power, but actually letting the people who know how to build nuclear build it. What does all this add up to? It means that new nuclear capacity creates the net new marginal buyer for uranium. And ultimately, What we haven't seen in the Western world for a long time is that net new marginal buyer. US utilities haven't really had to compete with any new fuel buyers over the last 2 decades. There's been the Vogtle 3, Vogtle 4 units come online in the US. That's it since the year 2000. And so there's going to be a new generation of fuel buyers that are going to create completely new levels of pressure on prices and on the actual volumes demanded that we think is going to sustain higher prices for uranium beyond what happens with Sprott, beyond what happens with the traders, other intermediaries. What's going to send us to $100 plus uranium sustainably is going to be that net new marginal demand. And so, with all of that in mind, Skyharbour for us allows you to get sort of ETF style exposure, differentiated exposure from over 40 assets in the or 40 locations in the Athabasca Basin, the highest grade uranium jurisdiction on Earth. And it's really, as I describe it often, 40 shots on goal, except today at 100 million Canadian market cap, if you score any one of those 40, then you're going to see meaningful upside to today's prices. And so that's why we're so excited about this business and why we're proud to support Jordan and the team on the advisory and investor relations side. So with that, Jordan, I'll hand over to you and Sadar, and yeah, thank you all again for your time.
Great. Well, thank you. And a big thank you, everyone, for tuning in today. Thank you, Curation. Let me get my slide deck open here and we'll jump right into it. I'm joined by Sadar Donmez. Sadar, why don't you give us a quick wave here? He's in Saskatoon. I'm in Vancouver. I'm President CEO. Sadar, as Ben mentioned, is our head geologist, and he's been with us. He's obviously a key part of the team. Joined us from having worked at Denison for 17 years. He'll talk a little bit about his background. But before I jump into it, disclaimer, forward-looking statements, please read these. Skyharbour, high-grade uranium exploration and prospect generation in the Athabasca Basin. As Ben said, we offer kind of a unique way to play this space in that we have 43 projects covering over 1.6 million acres. And so it's almost like, as Ben said, a kind of a quasi-ETF model with one company, an exploration company, offering numerous shots on goal. This is by far one of the largest property portfolios in northern Saskatchewan in the Athabasca Basin. As Ben said, highest grade depository of uranium anywhere in the world, 10 to 20 times the global average, which is just absolutely massive. Now we have projects ranging from early. Oh, sorry, Callum. We have projects ranging from earlier stage, more grassroots properties, your kind of typical earlier stage projects that have that, real significant torque or leverage to a greenfields discovery. And then we have projects that basically cover the full spectrum of exploration. And as Ben said, as we put it, we're an advanced stage exploration company. So it's not just the early stage stuff. We also have advanced stage exploration assets that either host small uranium deposits, so pounds in the ground, or they have high-grade multi-percent U3O8 in previous drilling. We've had grades as high as 20% U3O8 over 1.5 meters at our Moore Lake project. More recently, just in the last few weeks, we announced 12% over about 1.5 meters. So we're intersecting some very high-grade mineralization at several of our projects. Our two co-flagship projects are Russell and Moore Lake. Ben had mentioned a deal we just announced and closed with strategic partner of ours, Denison Mines, a multi-billion-dollar uranium developer and miner, a $61.5 million joint venture deal at that project, which sets the stage for a 15,000 plus meter drill program this year, in addition to the 8 to 10,000 meters that we'll be doing at our Moore Lake project. So a very significant amount of drilling, which is really where investors and shareholders of the company are following along the closest. One big drill hole that intersects high-grade mineralization over a meaningful width can add hundreds of millions of dollars very quickly to the valuation of the company. So as an exploration company, we're in the business of finding new and delineating uranium resources in northern Saskatchewan, the Athabasca Basin, ultimately to provide the fuel for the only source of baseload emissions-free electricity generation, which is nuclear energy. Now, just a couple of final notes on this highlight slide. We have a dual-pronged strategy. So I talked a little bit about our two co-flagship Russell and Moore Lake projects. We're advancing those through drilling. We've just brought in Denison as a partner at Russell. But we also act as a prospect generator, as mentioned, and that's a very unique feature of Skyharbour, this dual-pronged corporate strategy. And what a prospect generator does, you can think of it as almost like what a tech incubator would do with startup tech companies. We effectively do that with mineral properties, specifically uranium projects in northern Saskatchewan. So we'll acquire them, we'll do a little bit of work, and then ultimately we'll look to monetize them or bring in partner companies. We have 10 partners thus far as a part of this business, spending over $118 million in combined project consideration. So that's more than our current market cap. A good chunk of that is exploration funding that they have to put up to earn into the project. And we also receive directly from these companies annually cash and share payments, which significantly reduces our need to go and raise capital. Equity dilution is top of mind for us. We want to keep the structure intact. We want to make sure that any buying pressure that comes into the market moves the market higher. And so this prospect generator business actually allows us to generate a little bit of revenue each and every year, covering our G&A and most of our staking costs, which is, again, very unique to Skyharbour. Most exploration companies, the model is way simpler. You raise money, you spend it, you either hit or you don't. And if you don't hit, you have to hit the reset button. We've only had to do one hard dollar financing in 6 years. There's very few other exploration companies that can boast that. And from time to time, when we do raise money, we will typically raise money using flow-through financings, which is this, a government-backed Canadian means of raising money. We can raise money anywhere, though. It doesn't necessarily just have to be Canadian investors. We can do what's called a charity flow through, and investors anywhere in the world can participate. But what the flow through does is it allows us to raise capital when we need to at a premium to market, typically 20 on the low end, to up to 50% premium to the current market price. So therefore, the cost of capital is much lower. There's less dilution. And specifically, that money has to be spent in exploration. We can't use it to go and pay for G&A or marketing or anything other than the exploration, the money that's being spent to unlock value at the projects. One final note on this slide, I mentioned Denison Mine. So Denison is now a JV partner of ours at our Russell Lake project. They're going to be funding a lot of exploration at the project. They've been a long-standing strategic partner of our company, almost a decade now. They've been a large shareholder, and in fact, they just added quite significantly to that position in December. After we closed this property transaction with them, they went in and bought millions of shares in the market. You'll see obviously we had a bit of a move, a run higher after the closing of that deal, and it was great to have Denison kind of kickstart things there. Their president and CEO Dave Cates has been a director of Skyharbour for many years as well. But we have two other larger strategic partners. So you don't have to take my word for it. You don't have to take Ben's word for it. What the other reasons that you should be looking at the company, you've got Denison as a large shareholder and strategic partner at Russell, but you've also got Rio Tinto, one of the world's largest diversified miners, as a strategic shareholder. And last but not least, happy to say we have Orano, France's largest uranium mining and nuclear fuel company, as a JV partner at our Preston project. So those are three major strategic partners that clearly have comfort and believe in what we're doing. And I just wanted to draw your attention to those three companies, as it's an important part of our story. Now, moving on to the management team, and I'll let Sidar talk more specifically about our geological team, our technical team, because again, they're the ones leading all of the operations in the field. But just a quick overview of our our management team. I've been running the company since inception about 12 years ago. Come from a finance and entrepreneurial background. Built and sold a gold company with my chairman, Jim Pettit, called Bayfield Ventures. So we basically took the company from early stage exploration through discovery, through resource delineation, and ultimately we were acquired by a larger gold mining company called New Gold. That is exactly what we're trying to do here at Skyharbour. We're, as I said, in the business of finding deposits, delineating resources, but ultimately our end goal is an acquisition or larger corporate transaction. And then the new co can come in, the new company can come in, or combined company can look to develop those uranium resources and ultimately be producing. Jim Pettit, I mentioned, I've worked with here in Vancouver. So him and I have been business partners now for well over a decade and a half. Dave Cates, President and CEO of Denison Mines, I mentioned earlier. So Dave's been a director. I will note he's become quite a large shareholder personally, having added to his position more recently, as well as the Denison as a corporation also adding to their shareholdings. Joe Gallucci's the head of investment banking at Ventum, a financial institution here, predominantly focused in Western Canada. So he brings a wealth of capital markets experience to our board and our management team. And then I'll hand it over to Sardar to just cover our technical team, as this is a vital part of our business. And I'm proud to say that I think we've assembled one of the best geological and exploration teams out there, led by Sardar. So Sardar, why don't you quickly run through a couple of our key people here?
Sure. Good morning, everyone, or good afternoon, I guess. My name is Sardar Donmez. I lead the technical team here in Saskatoon. We have a fairly small team, but highly experienced. I was with Denison Mines for about 17 years, and then worked at 92 Energy in Athabasca before joining the team here at Skyharbour about a year and a half ago. I started my career at Wheeler River prior to the discoveries of Phoenix and Griffin uranium deposits. I was there during the discoveries and until the completion of the feasibility study in 2023. Our head consulting geologist, Dave Biard, has been in the business for over 40 years now. He's been involved in discoveries himself, multiple discoveries in the Athabasca Basin. And Christine McKechnie, she's a highly experienced geologist. She's worked at multiple deposits here in the Athabasca Basin, including the Eagle Point uranium mine. Sean Cross and Dylan Drummond, our project geologists, have worked in the basin for multiple years and on high-grade uranium deposits like NextGen's Arrow deposits. So we're a lean and mean but highly experienced team here, very much exploration focused. We've all seen the rocks, what they look like, and we recognize them when they see them.
Great. So, thanks, Sardar. And just to round out the team, Paul Matizik is a strategic advisor. You'll see him at the top. He's built and sold 6 mining companies. As I said, our goal here is to be acquired or to merge and to continue growing the company in the meantime. Paul has built and sold a uranium company for $1.8 billion. So he's a large shareholder and strategic advisor. Brady Rack joined us more recently from Ventum as well, capital markets experience that he brings a lot to the team. Share structure, 212 million shares issued and outstanding. We trade around a $100 to $110 million Canadian market cap. We're well funded, 12 million in the treasury now, receiving another 2.5 to 3 million from these partner companies I mentioned. That covers, again, all the G&A, all of our kind of day-to-day expenses. And then we typically will raise flow through, which we did late last year, to pay for the drilling and the field work. So we're well funded. We're not looking to raise money anytime soon. And you'll see some of the larger strategic shareholders. I mentioned Denison and Rio, our 2 largest corporate and strategic shareholders. Management and insiders, we own about 4% of the company. You can see we've been adding to our positions recently. I mentioned Dave Cates as well as myself. We've been purchasing shares in financings as well as in the open market, as have other insiders. And then we're in most of the uranium mining ETFs, and you'll see some of the notable larger strategic shareholders. So a good mix of retail, corporate, family office, and institutional shareholding. Good liquidity. The liquidity has been picking up. It's as Ben mentioned, the market's been volatile, but one thing that I do like to emphasize when we talk about Skyharbour and the projects and our valuation, and this is a good segue into this slide deck here, and then I'm going to hand it over to Sardar to talk a little bit more about the project specifically, but this is the whole project portfolio. Now, what is this worth as we see the uranium price move higher? Well, there's 43 projects covering 1.6 million acres all throughout the Athabasca Basin. 4 of these 43 projects were in a company that was a $400 million company in 2007. That's in 2007 dollars for what it's worth. That company traded up from a $5-6 million valuation. It rode that uranium wave that we saw in the mid-2000s. We have those 4 projects that were the basis for that $400+ million company in valuation in our portfolio, as well as an additional, call it 38, 39 other projects, including one of our co-flagship and most, I'd say, valuable projects, which is the Russell Lake project. That was not in that predecessor company. So the re-rate potential for this asset base, this project portfolio, as we see the uranium market move higher, is very, very significant. Now, we are focused primarily on the 2 main projects that you'll see here, Russell and Moore Lake. Russell Lake, again, we just announced a big JV with Denison. Moore Lake, we are expanding a high-grade shallow deposit called the Maverick deposit, as well as exploring some other regional zones that look quite promising. And Sardar will talk more about that. But before he does, Russell Lake and Moore Lake, 250,000 acres of property strategically located just south of the McArthur River mine, just northeast of one of 2 operating mills. That's the Key Lake Mill. But importantly for us, we basically encircle Denison's Wheeler River project, where they're building the next new large-scale uranium mine in this region, just a few kilometers away from our property boundary. You can see on the map here the Phoenix deposit as well as the Griffin deposit. The green project, Russell Lake, which is our project now joint ventured with Denison, basically encircles Wheeler to the north, to the east, and to the south. And that's very important. Obviously, proximity is key, but it's also important geologically because we're basically now exploring for similar deposit types, similar zones of mineralization to what Denison has on their side of the border, as a lot of these conductors, the main targets that you're drilling into, extend from Denison's project onto our project, onto Wheeler. Now, just a quick note before I talk a little bit about the JV. These 2 properties, in addition to the strategic location, they benefit from very, very excellent infrastructure, including the haulage road that services the McArthur River mine. It basically connects the mine to the mill, power lines, and an exploration camp that we've inherited from Rio Tinto as they refurbished the camp about a decade ago. Now, this is important because collectively, this infrastructure brings our costs down, our drilling costs down to some of the lowest costs of any company, of any projects in the Athabasca Basin. We're able to drill at these projects at less than $350 Canadian all in a meter. So that's inclusive of the drillers, that's inclusive of fuel, groceries, other logistics, camp, geologist, assays, you name it. And if you look at other projects in the basin, the average drill cost for exploration is typically in that $500 to $700 all in per meter range. So we're almost about half of that, which again allows us to have to raise less money to get the same amount of drilling done, or raise more money to get more drilling done. So that's an important part of our story, as well as these 2 co-flagship advanced stage exploration assets, strategically located, great geology, but also very, very low cost drilling. Now, the deal that we announced with Denison that we closed on before the the holidays. You'll see here. This is a breakdown, a summary of the transaction. You'll see that the color-coded property now. We basically reorganized the project into 4 separate property areas, but more bite-sized pieces for us to go in and systematically explore a very large land package. So Denison has earned an initial stake in these projects. They own a minority 30% at the green claim, a minority 49% at the yellow claims, and a minority 20% at the pink claims. The pink claims we are just keeping as an 80-20 JV. Denison is required to fund their 20% for the initial few years of the programs that we carry out at those what we call the RL claims. So that will remain Skyharbour owned and operated, majority owned and operated, and we are planning a drill program to commence later this year, about 5,000 meters of drilling at those pink claims. Denison will be funding all the work this year and going forward in the next few years at the yellow and green claims. Skyharbour is still operator at the green claim. Denison is operator at the yellow, but they will be funding the work there. And collectively, there are plans for well over 10,000 meters of drilling across those yellow and green claims. And the reason we did this, the reason we basically split the project up is the last few years that Skyharbour has been exploring the project, it's very difficult and challenging to systematically explore such a big property package. There's no question in our minds that there are deposits on this project. It's just a matter of how to find them, how quickly you can find them, and how, most importantly, how much dilution do you have to incur to actually get to make those discoveries and prove out those resources. This deal with Denison, we believe, is the ideal structure and JV agreement terms to basically expedite the discovery process. So provide that value creation as quickly as possible without that much equity dilution. Again, Denison's going to be funding over about 40 million in project exploration expenditures, assuming they complete the earnings. They can earn up to 70% at the yellow and the green claims by funding the 40 million, and then making additional cash and share payments to Skyharbour as well. So we are co-advancing, working collaboratively with Denison's team. And maybe Sardar, if you want to just have a quick note on the work that's being done with Denison and their team.
Oh, for sure. Yeah, so right now we've already started some modern ground geophysical surveys at the property, the green property there, the Getty East, and which the same survey, it's kind of a mega grid that covers targets on that green property and extends onto the pink, which we call our Kowalchuk target. There are it's again the pink, the RL claims still represent something like 73% of the original land package. So it's still a pretty large project with many targets that haven't been tested probably since the 80s. So we're advancing those targets through geophysics, desktop studies, and later drilling. We're hoping to actually get in there later this winter or in the summer and drill some of these excuse me, high-profile targets. Denison will be going into the yellow claims, the north end of the Wheeler North project in about 2 to 3 weeks, following up on some good stuff we intersected last year. And then they'll be going back and drill another 5,000 meters, really close to where Phoenix deposit is, within about 1 kilometer of Phoenix, where we intersected high-grade uranium in 2024 up to 3%. So that's the immediate plans, and we're still advancing the targets on that project as we go.
Great. Well, thank you. So I'll jump ahead to our other co-flagship Moore Lake project. As I mentioned, this is another advanced stage exploration asset adjacent to Russell. Been in our project portfolio for a number of years. It's really kind of been a bit of the workhorse for the company in terms of the assets over the last decade or so. Now, this project's exciting specifically right now because we've had some notable success with the drilling in the recent few years, where we've hit some very high grade mineralization in step out holes. We just announced in January an intercept of 12% over 1.5 meters at the main Maverick zone. So continuing to expand this high grade small deposit that we have there. What's really interesting though with this project, it's a big property, much like Russell. It's got a number of regional targets as well. In fact, we're going to be drill testing a new target, which is just a few kilometers southwest of the deposit, called the Nomad Zone, which is a new discovery, new zone, if you will, new discovered zone that Sadar and the team came across with last year's work. So we're excited for the exploratory drilling to take place there. But what's interesting about this project is it's relatively shallow. The high-grade mineralization at the Maverick zones of mineralization are within 300 meters of surface. Now that may sound deep, but there's lots of mining in the basin that's well below 400 or 500 meters. Anything within 300 meters is considered relatively shallow. And the reason, in addition to it being a little bit cheaper to go and drill and to ultimately extract, one of the other reasons that this is important is there's new mining methods, surface mining methods, that are being either used or proposed in the Athabasca Basin. Notably, just in the last year or so, less than a year, one of those, which is called Sabre, basically a surface mining method that Denison and Orano are using to mine small deposits up at the McLean Lake mine. It only works down to about 300 meters or so. And so it's designed to go and extract these smaller high-grade deposits that are shallow. And so this is what is becoming more exciting about Maverick, is that it is a relatively shallow, high-grade, multiple zones of high-grade mineralization. So we are going to be doing a little bit of work to further evaluate that opportunity. It definitely has the potential. But we are working on some internal studies and a resource estimate, which will be a key milestone as well at some point this year. So keep an eye out for news on that, as well as the drilling. I mentioned, in the near term at this project, we're going to continue drilling. We're going to continue to add pounds at the Maverick deposit and hopefully make new discoveries elsewhere in the project. And so we have 8,000 to 10,000 meters that will commence here within the next few weeks. And it'll be a multi-phased program throughout this year. So we'll be generating news flow basically right through 2026. So collectively, Russell and Moore Lake, our two co-flagship projects. We now have the backing of Denison at Russell as a JV partner. You'll see probably 24,000 to 25,000 meters of drilling across those two projects. A chunk of that funded by Denison Mines at Russell. That's a significant amount of drilling for a company of our size. But in addition to that, we also have, as I mentioned earlier, this added kicker, if you will, with our prospect generator business. So we've got 10 partner companies now. I've talked about Denison, obviously, at Russell, but you'll see a few of these other companies, notably Orano at our Preston project. These other companies are spending millions of dollars at our projects to earn in. You'll see at the bottom, $118 million in potential combined project consideration, well over our current market cap. That includes cash and share payments, as well as exploration expenditure and project funding. So this is the optionality value that is quite unique to Skyharbour, because if any one of these companies is successful in making a new discovery, that probably adds some multiple to our current market cap. These are big high value deposits in the Athabasca Basin. They can be multi-billion dollars in value, and they're not easy to find, as Sadar can attest to, and many other geologists working up there can attest to. But we know that the size of the prize is kind of one of a kind. In fact, they're the richest type of mineral deposit of any kind in the world on a value per ton basis because they're so high grade. So when you find them, you're typically finding something that's worth multi-hundred millions, if not billions of dollars. So for us, the idea here, the philosophy here is simple. We don't want to go and dilute into oblivion to fund the exploration at these projects. We've got a big project portfolio. Why not do what's called prospect generation, bring these partner companies in, monetize some of the non-core projects, and have these partners actively advance these projects. So we retain a minority interest in the project ultimately. We get cash and shares, so we have a big equity stake. That's the other part of this, as Ben mentioned, the kind of quasi-ETF style exposure. We actually do own directly equity holdings in these other partner companies. So you do get some exposure to the publicly traded partner companies that we hold shares in, which is again a unique feature of Skyharbour relative to most of our competitors out there. So of these other companies here that you see, we're expecting drill programs from at least half of them. And that's going to bring in or add to the total drilling meters this year in 2026. That'll bring the total to well over 30 to 35,000 meters of combined drilling. When you're looking at exploration companies, you want to know, obviously, that you're getting exposure to a meaningful amount of drilling. That's where the value is created. That's what moves the share price. And this strategy allows us to leverage other partner companies to come in and basically offer you and the investors exposure to much more drilling than we could otherwise do just on our own without massive dilution. So 30 to 35,000 meters across 7 or 8 projects in our project portfolio, and a good chunk of that is being funded by partner companies. To give you an idea of some numbers, as I mentioned, we've got about 12 million in the treasury right now. We're only needing to fund about 6 to 7 million direct costs in terms of our drilling, while the partner companies are funding close to triple that amount. So again, it's a significant amount of money and capital coming in from these partner companies. Now, I do want to hand it over to the audience here, or to Ben, anyone else that wants to ask some questions. I just will wrap up with this final slide here. Although I did, I think, hammer home some of those points. So just to recap Skyharbour, it's really a one-stop shop for high-grade uranium exploration and discovery exposure in the best uranium mining district in the world, one of the largest property packages of any company, over 1.6 million acres, one of the largest combined drill campaigns at well over 30 to 35,000 meters, a team that have built and sold mining companies that have made discoveries in the Athabasca Basin. And as Ben said, as a smaller company, about $100 million Canadian market cap, we offer that additional torque or leverage, or as the Brits like to say, gear to the market. So if you want that kind of exposure, Skyharbour is a great way to get that exposure. So thank you very much. I'll hand it over, Ben or Hope, anyone else that wants it. I don't know, unless Sadar, you've got some final points that you want to make. I think we hand it over for some Q&A.
No, I think you've covered it all, Jordan. Yeah, thanks.
Perfect. Thanks both. So why don't we start with Sabre, which I think is an interesting part of this business. So if you could just tell those on the call what Sabre is and why it might expedite your sort of timelines to actually producing uranium.
Yeah, so just full disclosure on this, right? Sabre is, it's a proprietary mining method, surface mining method with Denison and Orano, 2 partner companies of ours. What's exciting there, though, is they've just announced commercial production of it, as I mentioned, in the summer of last year, and from what we can see, it's going swimmingly well. I mean, they're very low cost. It's again specifically designed to extract shallow, high-grade pounds. Basically, and I'll let Sidar actually explain. Sidar at Denison worked on it as a part of the team there. But basically, it's a specialized drill rig. You drill a borehole down, you jet bore the deposit with water, so you're not even having to pump any, acid or lixiviant into the ground, and then you basically just pump that up to surface and ship it to the mill. And Star, maybe you can add a little bit more color to it.
Sure. It was designed originally to unlock the value of these relatively shallow but high-grade uranium deposits that are otherwise sub-economic. But Sabre itself, it targets these high-grade nodules, and you're just going after the high-grade stuff, and you're not really worried about the lower-grade portions of the deposit. And at Moore Lake, our Maverick deposit really is shallow, 275 meters, and super high grade. We've had intersections well over 20%. So these, let's call them high grade nuggets, are you're just going in there with these precise surface bored system and removing only the high grade portions of the deposit and taking it to the mill right away. So it's a fairly cheap system, and it's been tested now and proven. So
yeah, it's commercially producing up at McLean Lake, and so Ben, think of it as you some of these smaller nodules, as Sudar mentioned, higher uranium prices, maybe you can justify building a conventional underground mine, but you do have these pods or small deposits that are kind of orphaned, right? This technology, this mining method would allow you to get at those relatively inexpensively. Obviously, there's a very low environmental footprint as well, and you do need access to a mill, which again, the only two currently operating mills are on the east side of the basin where our core projects are.
And there's sort of two parts to the business here, which is the flagship projects, which obviously Russell and Moore, which you've gone into detail on, and then the prospect generator side of the business. If we just focus on the prospect generator side, how do you go about choosing the projects that go in there? And could you just run us through an example of how do you get a company, or how do you stake the land, you then find someone to go and I guess develop it, not develop it, but to explore it. You just run us through a couple of examples of how that process looks and how you choose the companies that go in there.
Sure. So the first step is acquiring the projects, right? Which I probably should have mentioned in the presentation. One of the other I think kind of key talking points historically for Skyharbour is because we were there in the mid 2010s in this market operating in the basin. As Ben, I think this was even before you got into the sector, started covering it. It was a very challenging bear market. Again, we were acquiring projects at pennies on the dollar. And through, you can online stake. That is, very inexpensive means of acquiring assets. So we've done that. But we also did, we went out and negotiated project acquisitions at a time when we were, again, able to buy them for at fire sale asset prices and valuations. And so we did a lot. We're still doing that, but we did kind of the bulk of that when we had the opportunity in a bear market to do just that and take advantage of those circumstances. And then what we'll typically do is we may do a little bit of work. Again, this is the incubator part, if you will, where we may go in and do some work, some geophysics. But really what we're looking to do with the non-core, and by non-core, I mean secondary, tertiary projects that aren't our core projects that we're actively advancing. Basically, the way we view it, we prioritize our projects based on the stage they're at. So Russell and Moore Lake are discovery-ready, advanced stage exploration projects, meaning that any next drill hole at either project, right, could be that 10 meters of 5 to 10% that adds, that doubles or triples the market cap, right? Not to say that that can't be the case at the other projects. It's just that, some of these other projects, earlier stage projects, we haven't found showing zones of mineralization or, as I say, multi-percent high grade. That's important because that shows you that the high grade is in the system. Now you just got to vector in on where it's come from, right? So Russell and Moore both have that. I mean, Moore Lake is even further along in that, we're at a resource expansion stage at the project, and, even kind of looking at early stage development. But these other projects, the earlier stage projects, it's not that they aren't geologically prospective. It's just that, again, they're a little bit earlier on in an earlier stage. And so we like other companies. We bring in other companies to advance those projects. And we typically structure it as a 3 to 5 year earn-in option. So the other company, each and every year for, let's say, 3 years, has to spend X number of, millions of dollars in the field exploring. And then they have to make cash and share payments annually to Skyharbour, at which point, at the end of the earn-in, they'll typically have a majority stake, anywhere from 51 to, let's say, 80%. We retain the minority interest. We'll usually, by that point, have a large equity stake in the company. So again, if they have success, both the equity and our minority interest in the project are worth a lot more. But the other interesting thing too, it's allowed us to build up a royalty portfolio as well, because we typically will create a 2% NSR royalty on these partner projects. So again, there's just a vast amount of optionality value with this prospect generator business.
And how should people, or how should investors think about, like, at what point do you call it a day with Russell and Moore? Like, or do you say, okay, in 5 years' time, if we haven't found a mineable deposit, then we move on to the next project? As you say, it matters less because you're not constantly diluting investors. But what is it that makes you so optimistic about these two projects in particular?
Well, I mean, maybe let Sardar answer that. I just maybe like both of these projects are on the main mining trend, hosted the largest uranium deposits in the world, and we know there's high grade at both of them. So, I'll let Sardar add to that.
Yeah.
But we and by the way, just a quick note on your like the time horizon. We think, especially now with this deal with Denison at Russell, you can. That 5 years is a long time. We think we've just shortened it by an enormous margin with this deal with Denison, because this is again going to expedite that discovery process at Russell. But Sardar, maybe you want to talk a little bit about.
Well, I'll add some technical flavor to that. It's you look at the the Russell Lake project. It's in what we call the elephant country. You have MacArthur to the north, 130 million pounds on the Wheeler River project to the adjacent to the west of us, and you have the old Key Lake operations to the south. So I think combined there's about 700 million pounds of uranium that have been mined or discovered adjacent to the Russell Lake project. It's one of the most sought after trends in the Athabasca Basin. It's called the whole structural trend on the eastern side is called the Wollaston Majestic Transition Zone, which hosts every single operating mine in the Athabasca Basin today. That includes all the Rabbit Lake, Eagle Point operations, Cigar Lake, MacArthur, you name it. So yeah, there are a whole bunch of trends that extend onto our project from the adjacent Wheeler River or Cameco's and Orano's projects to the southwest that have had intersections well over 80%. So what we're doing is we're identifying these high grade trends or trends with potential to host high grade uranium deposits, and we're testing them systematically. We're doing in a lot of cases where we do a lot of 3D modeling and go after these targets. When do you think? I mean, there are well over 50 kilometers of strike length that haven't been tested on the Russell Lake project alone. So I don't know when you would call it a day or call it quits. probably not in the next 5 years. Because again, we're constantly generating new targets on both of these projects. In the case of our Moore Lake Uranium project, we have a high-grade deposit, but there are trends along strike of the high-grade deposit that haven't been adequately tested, and that again, we talked about the Nomad Zone. Only 1.7 kilometers from the Maverick deposit, but didn't receive any interest until last year. So we're constantly finding new zones. It's a treasure hunt, but one of the best indicators of uranium is uranium. So if you have uranium in the system, high grade deposit, these things form pearls on a string, like little pods along these structural trends, and we're finding new zones every day, it seems like, on both of these projects.
And how do we think about the upper limit? Do you just keep going and staking projects and claims and keep adding to the prospect generator? Is there like a target number that you would have? And then a second question that's come in is the revenues that you earn per year on the prospect generator model. So are you just incentivized to keep adding to that to increase revenues?
Yes. I mean, if we could continue to scale it, we will. Look, there is a finite amount of land and properties in the basin. So we fortunately do have still do have a very large inventory of 100% owned properties that we're actively seeking partners on. We're confident we'll get a few more option and JV agreements signed this year. But you can't go and stake everything either, right? So it's also limited, Ben, as you know, with other companies, right? Like we need other companies operating there, there is a bit of a fine balance, I'd say, between just having kind of too many partners, and having to manage too many partnerships and programs. So there is call it a happy medium. I think there is still room to grow the business, but I think the key with the prospect generator business, for investors to kind of wrap their heads around, one, I don't think we're getting much value for it, as you typically do not. Like, there are companies in our industry that are just pure play prospect generators. That's all they do. They just do that. They don't do focused exploration and drilling programs at one or two projects that are what kind of the traditional exploration company model is. And they always seem to trade at a fairly substantial discount to what you probably would ascribe as a net asset value. But in our case, we do both. And for us, it's more where you see the value, where the value is crystallized, is when one of the partner companies has a big discovery or has success, right? There is value in, obviously, the less dilution. There is value in some other features of the prospect news flow. There's lots of ongoing catalysts. But where you're going to see the big win for us and our shareholders with the prospect generator business is when one of these partner companies makes a significant discovery.
Great. And then I've got two more questions. I think one of which I'm probably better suited to answer, which is around, I guess, the potential of a sort of a buyout. I mean, you guys are sort of, I guess, limited in what you can say on that. I mean, Jordan's mentioned that, that is obviously the aim here. And in a rising uranium market, companies like this that have got as many interests in as many different areas in the highest grade uranium jurisdiction in the world is obviously an attractive thing to own. And particularly as incentive prices start to get much, much higher, we will ultimately see supply side responses when we go up above the $100 a pound range. And I think obviously Denison is the clear front runner to do that, based off the sort of the relationship between the two businesses, particularly that strengthened over the last 6 months. The second question is around investors allocating more capital down the curve. I mean, Jordan, I'll start on this, and then it would be interested in your view that there's normally a rotation as we get later on in the cycle. from sort of the producers down to the developers, down to the juniors, which, the juniors are sort of by no means disregarded, but so much of the focus in a rising uranium price market at the beginning is on the producers who are actually capturing that value. But certainly from what we've seen, and testament to the number of people on this call, is the interest in the sort of further down the curve, down to the developer exploration companies. But these are the companies that tend to outperform towards the later stages of these commodity cycles. But Jordan, is there anything else to add there before we wrap up?
Yeah, no, that's I think a great way to end this. To be honest, talking a little bit about what happens later in these cycles and these bull markets. You look at the 2000s, the mid 2000s, the juniors, right? In the 2002 to 2007, 2008 run, the first few years, they were only up on average about 200 to 250%. Cameco was up over 700% in that time frame. The last year and a half, 2 years, the juniors wound up on average up 1,200%. Well, Cameco finished up, pretty good 800%. But you can think of that, basically that mad dash at the end for the juniors, and that's pretty typical, and it makes sense, right? Capital, as you said, capital flows to the larger, more liquid names that capture that value in the initial stages of a bull market. And then, as the prices and valuations rise, as the market continues to move higher, you'll see capital flow down, right? The value chain, and ultimately wind up in some of the, in the juniors and mid tiers. The other thing that drives that is, as you pointed out, Ben, M&A, right? You typically see M&A, you see strategic investments. I mean, talking about specifically Skyharbour, this deal with Denison at Russell's a perfect example of that. You start to see the larger companies thinking ahead, right? They're thinking about their pipelines, they're thinking about where the next mines are going to be, and they make investments into the smaller companies, and that obviously drives the valuations higher for these smaller companies. So yes, I do believe that this is call it a key selling feature right now for the juniors and mid caps, is the fact that we are working our way into the latter part of this bull market, and typically the juniors do outperform.
I think that's a perfect way to end. And for anyone who wants to read the story again at a high level, Hope's just put the Curation Connect showcase into the chat, where you can watch interviews with Jordan. You can get curated summaries of their annual reports, quarterlies, and really get to the crux of why this is such an important story. With that, Jordan, thank you. Sardar, thank you. You guys, and I know Jordan comes over to the UK a couple of times a year. So for any investors on the call who'd like to meet Jordan and the team in person, he'll be over in April, and more than happy to arrange those meetings at Ocean Wall or at your offices. So with that, thank you everyone for joining. Thanks, Jordan. Thanks, Sardar.
Thank you, everyone. Really appreciate it.